Welcome to Private Banking Strategies Podcast with Vance Lowe and Seth Hicks, your secret weapon to protect your assets and never have to start over financially again. Vance and Seth help high net worth individuals, families, business owners, and investors structure an asset-protected, tax-free fortress for their families. Learn how to keep what you earn and use the velocity of money to create your own private banking system. Join us on this journey as we explore the secret strategies of the rich and political elite and help you take total control of your financial security. Now, on to the show.
Welcome back to another episode of BlockHash, exploring the blockchain. Today with Seth Hicks, the COO of Private Banking Strategies, here to talk about the private banking sector and where crypto fits into this, and what are some of the intersections that could be really important that people need to know about. So we're gonna have a long conversation about that today. Seth, welcome to the show, man.
Hey, thank you, Brandon. I'm really grateful that you've invited me on and glad to be here, man, enjoying our discussions off air and looking forward to bringing some value to your audience.
Yeah, likewise. I'm very excited to have this conversation with you. I think it's going to be a real good one. Before we, jump into it, tell us a bit more about yourself. I'm sure people would love to know about your background, how you kind of wound up doing what you're doing now. We can see all your accolades in the background. So obviously you're well-versed, well-studied at what you do.
Yeah, thank you. Well, I went to law school after playing competitive sports in college and had a traditional legal background. Practiced in a large law firm doing real estate transactions, and then spun out into my own boutique law firm where I did both commercial business litigation and commercial transactional work. So helping people structure, restaurant acquisitions, real estate development, and then also litigating those disputes on occasion when they would arise. So I got kind of both sides of the coin from putting deals together and then also litigating those issues. Pretty much a traditional story of legal practice in that sector. I operate with family-owned businesses, small business offices and such. And then, I guess I'll fast forward to when I met my partner, Vance Lowe, in Private Banking Strategies through a client that I represented. And he said, hey, you've got to learn about private banking strategies. And as I started to peel back the layers of private banking strategies, I was just blown away that I had never come across it before or understand how valuable it was and what I already did. Because one of the main things I help people do as a lawyer is keep what they make. You want to avoid risk, mitigate risk, and you want to be able to capture opportunities. So there's some tools in the private banking strategies world that are unique to that universe, and they are unknown to most people. So when I began to discover those, I really locked onto it like a dog on a bone. And I guess the rest is history. So now I incorporate that in with the structures for clients that I represent and help them keep what they make, help them take advantage of the laws that are available to them, help them stay financially private, and all of those type of things.
Very cool. How long have you been doing it for?
I've been practicing law for about 25 years. 25.
Oh, wow. Quite a long time.
25 years. Yeah. My wife tells me I look much younger than I am, so I appreciate it.
I wouldn't have expected 25. You look great.
Thank you. It's personally, I like to exercise, like to be outdoors and fish. I've got a family. I got 6 kids that range from 8 to 2 months. And so they keep me young, and following them around, chasing them around keeps you young.
Yeah. You mentioned you played sports in college, right?
Yeah, sure did.
What
played
sport?
Soccer. Yeah, I
Soccer.
played soccer at an NAI school that competed for a national championship pretty much every year for about 30 years. And so enjoyed that quite a bit. And actually, some of my friends, they went on to play professional. And I thought, well, they were making $35,000 a year living in hotels. And I thought, should I do that or go to law school? And so I opted for law school.
No, that's probably smart, opting for law school, I guess. So many different career options you can go down.
Yeah, but Brandon, I went to law school at Pepperdine, which is in Malibu.
Mm-hmm.
So you ever been to Malibu?
I have. It's very beautiful.
That's the only place you need to go. That's the final destination. So, I, enough said. When you're in the coast and on the beach, and the school actually overlooks the beach, so you sit out there and you're like,
Hmm.
this feels like paradise. Why would I want to go anywhere else or live out of hotels? I don't think so.
That sounds nice.
It's awesome.
Very cool. Tell me more about about private banking strategies. What about that struck interest with you as a career path to go down and focus on?
Sure. Well, there's fundamental values and benefits of private banking strategies. And one of the first fundamental pillars that we like to discuss is asset protection. And asset protection, especially in the legal counsel influence, you want to protect your clients. So there's asset protection tools within private banking strategies that completely blew my mind that I wasn't aware of. For example, the private banking strategies contracts that we use protect your cash value, whereas other traditional means of storing fiat cash, they don't protect your cash value. And then, of course, everyone wants to take advantage of the tax laws that are available to them. And with these particular contracts that we structure in private banking, there's an internal revenue code section that provides the money in and the money out, and all the uses that you have in your own private banking system are not taxable events. So those are two main pillars. I mean, there's a number of pillars that we can discuss, but I'd say those are the main two that captured my initial attention. And at first, I was somewhat skeptical that the purported values were actually there, and had to dig through, roll up my sleeves, and actually convince myself that it is. And now, after utilizing the tools, and there's nothing like it. There's no safer place for your money. There's no safer place for it to grow. And ultimately, there's no risk. So I've never been a big equities person where people, they purport to make 30% in a particular investment year over year. We don't see that. My partner Vance is a 40-year wealth manager, and he managed traditional stock and portfolios, and is really keen at pointing out the way that those numbers are misrepresented and the risk that really comes back to lie upon the investor and the client. Contrast that with the private banking strategies, and there is no risk. Your value never goes backwards in a private banking strategies contract.
How many private banking strategies pillars do you have in place?
There's seven
Seven. Okay.
fundamental pillars that we like to focus the conversation on, and I'll just run down through them. So we've got asset protection, which I mentioned.
Hmm.
We've got a tax-free economy. So you're working within a tax-free system when you put money in, and it grows, compounds year after year. That's not a taxable event. And then, unlike a 401k or a 403b or any other type of government qualified retirement plan where you can't get your money out without penalty, you can pull your money in, put it in, and take it out without any taxable event, no penalties. It's simply a matter of telling the insurance company where you want them to wire your money. And you can use that money for investment purposes like crypto, or you can use that money for real estate investment. You can use that money for any purpose you want. There are no limitations. It's your money, and you can pull it out and put it back in as you please. Then one of the other main pillars that we structure for clients is the financial privacy. Unlike, I don't know if you've ever tried to take cash out of the bank in a domestic big box bank, but you go in, let's say you want $10,000 in cash for whatever reason. You're going to go buy gold or silver at the metal shop, or
Whatever
the
you
guy,
want.
whatever you want. Yeah, you
It's your
just
money.
want it's your money.
Hmm.
Well, the bank may have an issue with that, and you may have to go through, talk to three or four different people, and then the branch manager asking you, well, what do you need this money for? What do you want the money for? As if it's their money and not your money. And so financial privacy with the private banking strategies is something you don't have to you don't have to deal with. The bank doesn't raise their hand and issue a 1099 when you put money in or when you take money out. There's no taxable event. So asset protection, the tax-free growth, the financial privacy. Then another big one is called the velocity of money. And the velocity of money is where you can get the multiple touches on the same dollar. And you go, well, what does that mean? What would that mean to you? Multiple touches on the same dollar. When I heard that, I'm like, you can only use a dollar once. How can I use it more than once? Wouldn't you agree? Is that your initial thought?
Yeah, that's definitely my initial thought. If I want to buy an apple and it costs $1, it's transactional. Give $1, get an apple. So, but hearing that, it's like, oh, I can, spend $1, get an apple, and I still have $1 somehow.
Right. Well, think of it like this. I'll give this illustration. So let's say that you've capitalized your bank, your private bank, with $1.
Mm-hmm.
And like I said, you can take that dollar out whenever you want. And you take that dollar out and you take that same dollar that you've capitalized your bank with. And by the way, if it's structured in a certain way, the life insurance company treats that dollar as if it's always there, even when you pull it out. So it continues to grow and compound even when you've pulled it out. Okay. And you pull it out in the form of what's called a policy loan.
Mm-hmm.
Your life insurance policy, you pull out a policy loan on the cash value. Take that dollar out. Let's say that you want to invest in crypto. Okay, so you want to buy Bitcoin with that dollar, or let's use a coin that you can stake because it'll give you a return.
You use Ethereum.
Ethereum. Okay, proof of stake. So you buy Ethereum, and we're going to stake that Ethereum, and it's going to pay us a return, and that passive cash flow return will say eventually it's going to give you that same dollar back. You're going to put that same dollar back into your bank in the form of payment of a policy loan.
Mm-hmm.
And then you're going to take, let's say, $2 out of your bank, and you're going to go buy 2 Ethereum. You're going to stake those Ethereum, and it's going to spin off an even greater return to you. You're going to take that return, pay your bank back. So you've capitalized your bank, you've paid your premium, capitalized your business, so to speak, with $1. You've pulled that dollar out for the investment into Ethereum. That same dollar has spun off a return to you, and then you've paid back your loan that you pulled out of your own bank with the same dollar. That's getting multiple touches on the same dollar.
Mm-hmm.
And the same concept works for any investment that's going to provide a return, whether it's real estate
Mm-hmm.
or oil and gas or even a business, any type of business. So it's the same concept. But you made a good point when you said buy an apple. If you're going to consume the seed,
Mm-hmm.
you're going to eat all your seed, you're not going to have a harvest. You have to plant the seed
Mm-hmm.
to get a harvest. So if you took all of your money and bought apples and ate them all, there's no return on that. So you've got to be smart in that. And we like to say this is for pretty much anybody. Folks that are super deep in debt, we've been able to help get into the black, and multimillionaires and high net worth folks the same way, just profit greater. But if you spend more money than you make and you're not able to live within your means, this won't work for you, nor will anything else.
Mm-hmm.
Right? I mean, that's a given.
Yeah, you see this a lot actually in real estate too. Smart real estate and entrepreneurs will buy like a home and they might live in it for a couple of years. Then they'll take out like a HELOC and then they'll borrow against the home, buy another one, then start renting that home out. And in that couple of years, they were renovating it with the capital they had and raising the value. And then eventually they have 2 homes. One of them gets paid off by the people renting it. And you can just repeat the process over and over again. It's kind of similar to what you're talking about.
Yeah, absolutely. I mean, the same concept works. Like, let's say instead of $1, let's call it 100,000, and you can buy a little duplex in Alabama for $100,000. So you buy it free and clear, and it spins off $2,000 a month to you, and you make $24,000 gross a year on that little investment duplex.
Mm-hmm.
Or you take the same $100,000 and you put 20,000 down on 5 different duplexes. Use bank financing on the other 80% because it's an 80-20 loan to value there. And instead of making $2,000 on one duplex, you make 5 times $2,000, $10,000 a month or $120,000 a year and recapitalize your bank, rinse and repeat, and use that leverage.
Hmm.
And then you also, I mean, as you're using your bank financing, you pay off those third party lenders, and you eliminate the drag and the volume of interest that accumulates on those type of 30-year amortizations. But same concept. I mean, you
Hmm.
got it.
Did that story feel like it was about you? Do you feel like you are generating a lot of revenue but are not moving forward as fast as you would like? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please call Private Banking Strategies at 817-200-4777 or visit us at www.privatebankingstrategies.com.
You're talking about like really smart ways in terms of using credit and loans and smart ways to use debt. It's really interesting ways to do this with crypto too, because from what I've learned, loans you take out are not taxable events. So if I were to borrow against something or get a loan from the bank or even borrow against my own crypto, that money is not taxable itself. And I could put that money to work to generate money. So like, for example, I could borrow against my Ethereum to buy more Ethereum if I wanted to. And that Ethereum I could stake and pay off that loan. And, for the most part, that is tax-free from what I understand. So there's some really good strategies out there that I think people haven't fully taken advantage of, but I'm sure the ultra wealthy, have thought about at this point and probably are. Staking's, very, very interesting in crypto.
Yeah, absolutely. I think, conservative leverage or leverage that you're able to service and that you're able to maintain is a way to accelerate the wealth curve. And this, strategy with private banking is an excellent way to get the money back that you've put into play. And so you've got to always think of what we're doing as a separate banking entity that you have to pay back. And so you're always getting the money back, no matter what the investment is. And as that accumulates, the growth becomes parabolic, over time. And we've got illustrations that hopefully we can get into as we progress and begin to illustrate that show the parabolic effect decade after decade. So you start to implement these strategies when you're young, and in 10 years it's got phenomenal growth. In another 10 years, even more phenomenal growth. But then by the time you're actually 60, 70, 80, it's becoming hockey stick parabolic. And it's you don't have to be super wealthy to start. It's the compounding nature that creates that parabolic growth. So it blew me away.
If you were some really young entrepreneur that didn't have a lot of money, but didn't have like a lot of bad credit or anything, that wasn't a ton of debt, just starting at zero, how would you go about doing that, taking advantage of a strategy like this to maybe start creating that kind of wealth?
Yeah. Well, I would capitalize your banking strategy first,
Mm-hmm.
and I would take advantage of those pillars that I've described and a few more that I will. And
Mm-hmm.
then, if you're a crypto guy and you understand that space, and then I would probably go gravitate to something like Ethereum that we both concur will hold value over the long term and still appreciate probably more aggressively than Bitcoin. And still, if you're staking it, you're getting a return on it. And so you're able to pay back that loan that you've taken from your own bank, and you're replacing that capital and you're adding to it year after year. It's compounding and growing year after year in a tax-free economy, tax-free system, and you're still growing your Ethereum portfolio. So that sounds like a pretty safe strategy from the hypo that you gave me
Mm-hmm.
if you're a crypto person. If you're a real estate guy, you're going to have to accumulate a little bit more money to be able to purchase that real estate, even using your own bank as the deposit, as a second mortgage, so to speak. Does that make sense, Brandon?
Yeah, that definitely does make sense. You mentioned earlier about, pulling the $10,000 out of the bank. I think that's something people don't also realize that is a huge problem, because the banks don't really have the deposits they say they do because of fractional reserve banking. Curious if you could touch on that a little bit, because it's definitely something that's affecting America right now in the US economy. And we've had some banks go under because of the lack of deposits that are available. And it's scary for a lot of people that, want to go to the bank and believe that it's insured by the FDIC, but even the FDIC has come out and said that they can't insure it, which is very problematic.
Yeah, absolutely. It's something that we've been talking about for at least half a decade. And, some folks like the older generation, including folks like my parents, they they have a tough time getting their head around it because they were brainwashed to believe that the banks are there for them, that they would never, be take their money, so to speak. But
Right.
we're seeing now that there are bank failures, and in the 2008 mortgage crisis, when there were a lot of toxic debts and waves of foreclosures, we saw that the federal government stepped in with taxpayer dollars and bailed out the too big to fail financial institutions. And people, had an uproar and outcry that said, hey, you can't use tax dollars to bail out private entities. That's never been done before, and it shouldn't be done. It's not capitalistic. They should just fail. Well, so there was legislation that was enacted, and it's called the Dodd-Frank Act in the Obama administration. And the Dodd-Frank Act, I'm going to summarize it, and this is probably going to be hard for some people to swallow if you haven't ever done any research on it. But the Dodd-Frank Act authorizes bail-ins. And instead of a bail out where the federal government comes in and bails out a financial institution, now the law provides that these centralized banks can bail in on the depositor's money. And we saw that happen in Cyprus in 2012 and 2013. And I've actually got firsthand knowledge through clients that had banking relationships in Cyprus that lost millions of dollars, where the bank was insolvent and bailed in on their depositor's money. And their depositor has still in litigation trying to recover money. So the bail in is where the bank effectively says, we're insolvent, we're taking depositors' money, and we're going to either issue bank stock, stock in the company, or pennies on the dollar, but the bank will go into receivership, and ultimately the depositor loses. The Dodd-Frank effectively created a system where your deposits in centralized banks are not yours anymore. They're the bank's, and your bank statement is an IOU. And I'm paraphrasing and summarizing, but effectively, if there's failure, that's exactly what it means. And people go, no way. I mean, that's impossible. It's my money. No, it is possible. And we're seeing the effects of that. We saw some bank failures in the recent past, Silicon Valley Bank, Signature Bank, and the Fed stepped in and effectively made good on deposits. But ironically enough, the key employees and financial hedge funds and other, like large investment companies that were in the bank, they got the warning well before the folks like you and I.
Oh yeah.
And they were out. They were out, and they were protected. So you brought up another key word, fractionalized lending. And that's an important concept that some people don't realize, and some do. Fractionalized lending is when you and I take $100,000 into a big box bank. They only have to keep a portion, and depending on the size of the bank, depends on how big of a portion they have to keep in reserves. And so let's just say it's 10%. But for the biggest banks, JP Chase, Wells Fargo, Bank of America, it's not even 10%. It's less than 10%. But let's just, for argument's sake, say it's 10%. So they get to use your $90,000, Brandon, that you just deposited, and they go and they start making loans with it. They make auto loans, home loans, business loans, and they make a profit on that. And the actual cash, if you wanted it back, you and every other depositor came back the next day and go, you know what? I want my money back. I'm going to go put it somewhere else. It's not there. They've loaned it out. And that's what you call a bank run. And when the consumer's confidence in a bank fails, they rush to the bank to get their money out. And because of the fractionalized lending, they don't have it there to give. And so that is why that your centralized banks, in my opinion, are not a safe place to store cash. And so we we still need centralized banks in our current culture for convenience. If we're going to send a wire, if we're going to do typical transactions, you generally do those with the convenience that those banks provide. But as a store of value or just to camp your money out, absolutely not. You need to have some other form of safe haven, for your money. And
Right.
that's what private banking strategies is for cash.
Yeah, I learned this from Mike Maloney a long time ago. He has some really good videos on how the debt works in the US economy. And it's very similar in most economies around the world now. But it's not even just the fractional reserve banking, the fact that they lend out all that money that you deposit and then not having it to insure, but they're also, creating credit too. Like if they lend out 9 out of 10 of your dollars and you swipe your debit card, in theory, it should decline if you get something that's $11. But the reason you're able to is because they punch in on a computer digital credit that just goes into the economy, and they're just constantly flooding it with all this credit. And it's one of the reasons why we're dealing with such crazy inflation and the debt ceiling and having to, tackle that every 3, 4, 5 years. It's quite insane, and it's not sustainable. Eventually it'll fall apart. And I think what's important for people, and I'm sure you'll agree, is, how to protect your money, your wealth, not just shoving it in the bank and then just hoping that it'll be there in another 10 years, but how can you compound it? How can you make sure that it's generational wealth? What happens if something happens to you or your company, or whether it's illegal, whether it's the government, how do you build a system that works to protect your wealth?
That's right. Well, and the answer to that, I think that there's a need for diversification. I
Hmm.
mean, a lot, if not all of our clients have a diversification, mostly with hard assets. A lot of folks are that diversify with metals, precious metals. And we generally are of the opinion that taking possession of those metals is the safest way to possess metals, which, if you're ultra wealthy, creates some logistic issues. To store a couple $1,000,000 in silver
Hmm.
is takes up quite a space and super heavy,
Right.
um, but also real estate, cash flowing real estate, and also land. And for the cash, the actual cash, if you're not trading that cash into another asset, the private banking world is a system that has never failed since. I mean, it's existed for centuries. Before there was branch banking, banking was done through life insurance policies. And through the inception of our country, through the Civil War, through the Great Depression, through every other financial downturn, these strategies with life insurance contracts have paid dividends with the companies that we use, haven't failed. And the primary reason is there is no fractionalized lending, there is no derivative banking. And it is all one for one on a balance sheet. When someone dies, they've got to pay the death benefits and cash on hand. Plus, they've proven to be the sharpest investment entities on the planet, and they actuarially nail people's death like down to the month,
Hmm.
based on their statistics, which is mind blowing. But so they don't get it wrong. And that's why they're more than financially solvent. They're the most prosperous entities that exist. And get this, this is where Wells Fargo and Bank of America have massive assets on their balance sheet, is they place life insurance policies on their employees, which the bank owns. So when the employee dies, whether they're still an employee or not, the Wells Fargo collects the death benefit. But in the meantime, they get to use all the cash that they're paying on the life insurance premiums on the employee as cash on hand, but it's stored in the life insurance company. And the last time I looked at the balance sheet, it was either Wells Fargo or Chase. It was 20 billion annual in premiums they were paying on their life insurance policies. So, I mean, that tells you right there, that's a tip.
Hmm.
It's like that exposes where they really believe the safety is. So that's part of the system. I think it's more complicated than that, but that's that's kind of an overview of it.
What do you think about some other maybe non-traditional assets that people might not think about that could be good stores of wealth as well? Like we all know of gold and silver, Bitcoin, real estate, especially over the last year or so. I've seen a lot of people with money investing into liquors like whiskeys and wines by the boxes. I've seen some very interesting ways to put money away, but some of the interest that they earn or even the dividends and the royalties can be really, really good depending on the asset. I'm just curious, like if you had heard anything that might be different than traditionally what you might hear as a store value.
Yeah, well, precious metals, art. There's some folks that are in art, but I
Mm,
would always encourage the investor to know, your lane, so to
sure.
speak. I've been pretty deep in real estate, so most of the things that I'm knowledgeable about for clients is in the real estate sector. I know enough about metals to provide some value there, and enough about cryptocurrency to likewise stay in those lanes. But I'm sure that there are lots of smart folks out there that have these alternative lanes that could be really good sectors. But I find if you jump out of your lane, you don't really understand what's going on.
Hmm.
Like you'll have somebody jump off into oil and gas, for example. A lot of folks in Texas do oil and gas, but if you don't understand that investment, you can get taken to the cleaners, you
Hmm.
know. And so I think that would be my advice, is to kind of stick with what you know, or consult with a team of experts that really understand that type of investment. But I'm sure that there's going to be broadening asset classes and things that don't most people don't know. Things that have come across my radar lately are like car washes.
Hmm.
Self-storage facilities have been huge. Car washes have been taken on a big investment interest. Mobile home parks and destinations. From the pandemic, people went into RVs and traveling, and moved around the country a little bit more. So the RV market and those RV parks saw a great surge in value and demand. Those are all somewhat real estate oriented. And then of course, like, as you know, I mean, we're both cryptocurrency enthusiasts, so I think we're still on just the beginning front edges of this
Hmm.
brand new frontier, don't you think?
Oh, absolutely. That includes parking lots and laundromats. I think there's something to say about, the low income opportunities that I don't think most people think about anymore because they don't really use them, but there's a lot of people out there that do. And they actually are, pretty good revenue generating businesses that, don't require a whole lot of effort to run. Some of them run all by themselves. You mentioned car washes. That's another really good one. Very simple and straightforward and usually just handles itself. So yeah, I think there's a lot of opportunities there. And crypto too is definitely another one. I know that you're very interested in crypto as well and have studied it quite a bit. And I'd love to know some of the intersections here between crypto and private banking that maybe you have been able to ponder a bit and come up with over time.
Yeah, absolutely. You know, the crypto space is very, very much aligned with the private banking strategies, benefits, and values. Most of the cryptocurrency enthusiasts, they want a private transaction,
Hmm.
financially private interactions to the extent that it's possible, and it is possible. They want less government intrusion into their investments. They want to be protected. They want their assets be protected. They want to create systems for growth that other asset classes just don't provide. So there's a number of intersections, but we have a tremendous number of crypto enthusiasts and crypto investors that are also private banking
Hmm.
folks. And I would say that we've kind of touched on how they utilize it a lot of times, especially those who are in a long bear market, want to see a return and want to see some type of value. So they're staking the coins that they can stake, and they're pulling the loans out of their policies, and they're putting those into cryptocurrency, proof of stake coins, pulling out returns, paying back the bank, and creating a cycle that still keeps them ticking forward. And then, as you and I have discussed, when the leader begins to take off, and if we've entered into the first phase of a bull run, we're going to see in the next 5 phases, according to Elliott wave theory, that we're going to see all this value return. And so these systems will be amplified, they'll be multiplied, and they'll be increased. And so you'll have the appreciation on your investment from the rise, and you'll also have this spinning off of the return. But I'll take a breath there and let you have a follow-up question.
No worries. One thing I love about crypto the most is how much inclusion it has. There's a lot of people that just don't have access, even in the US, that don't have access to a lot of banking services that maybe you and I have. And there's a lot of things that you and I don't have that probably the ultra wealthy have too. And it's just kind of how it goes class by class. But the great thing about crypto is it opens that up so that anyone, if they choose to do so, can take on that responsibility or those consequences. And I think that's everyone's human right. They should be able to. And crypto's become stable enough that it's starting to make a lot of sense. Like, for example, you can, if you have $1,000, you can borrow against that $1,000. If you have $100 or 10,000, you can borrow against that 10 or that $100. Likewise, you can put any money you have, any credit into crypto. So it's not you have to be an accredited investor. You don't have to meet those standards and have a CPA sign off on it. You don't have to prove a strong credit history that you've made every payment ever. Crypto doesn't really care about that some type of stuff. It's not trying to put you in a category, and it's giving you all those tools to play with. So there's so many more options today, even over the last couple of years, that young people I don't think have had in a very long time. And it almost creates no excuse to be able to set up a system and build wealth, even if it's little by little, which is the fantastic part. I mean, how many great investments are out there that you can put $1 into and the threshold is that low or lower? You want to buy a stock, you have to buy a unit in most cases. And now there's fractional ownership of stocks. But I mean, for the most part, the bar to entry is usually very, very high. So it's cool to see how much more inclusive the space is. And that's going to do a lot of good for a lot of people in the world. The other billion or 2 billion people, whatever it is, that don't even have access to basic banking. So I see so many different economies and countries kind of rising up over the next 10, 15, 20 years and kind of coming out of nowhere simply because this technology allows them to do so.
Agreed. Yeah. I mean, I think the barrier to entry for crypto is super low. And that you've got, once you understand the mechanics and get through the initial learning curve, it's a no-brainer. And that most people that haven't adopted or don't understand it's because they haven't educated themselves. There is an education process, and so we're grateful for folks like you at bringing valuable content to people to help them educate and make decisions. But yeah, totally concur with you on that. And the whole idea of the game is to become, financially free and independent and not a slave to a system or beholden to some other control mechanism that you don't want to be. And, we spoke a little bit before we started recording about your journey, and we're kind of headed off to medical school. We talked about how I've got numerous clients in the medical profession, trauma surgeons, anesthesiologists, and high level, high earning, high class and high educated doctors who still don't feel financially free. They have a lot of money and they've accumulated a lot of wealth, but they still don't feel financially free. They're beholden to a system which they have, they're under the control of that. They have, and there's all sorts of pitfalls with it as well. Whereas with crypto, it doesn't have any of those cons. It doesn't have any of those problems. And if you're, like you said, as we can incrementally increase, and if you're smart and wise, it's going to outperform every other type of investment that's available. I mean, like I mentioned, when I started looking at Bitcoin, I remember thinking this, Brand. I thought, there's no way, that I'm going to pay $1,000 for a so-called Bitcoin that I can't see, touch, feel, and I can't do anything with. That's what I thought,
Hmm.
as opposed to buying an ounce of gold. I'm going to hold my gold. And little did I know or understand how ignorant that was,
Hmm.
and so I think as people begin to understand that, begin to adopt this more and more, we're going to see total market caps go from an all-time high of 3 trillion to 30 trillion. And you're going to see this massive swell, and early adopters and folks that have already educated and know what's going on, we're going to be, leaders in that
Hmm.
in that rush.
Absolutely. I totally agree with that. And I think this is one of the most important times in all of financial history that we're living in right now, simply because, and this is my opinion, that we haven't had a real financial innovation on what money truly is until we had Bitcoin. We've had gold for thousands of years. And for thousands of years, we've agreed that gold is the standard for money. And it's been that way, and it's been fine, and it's been great. But as we've progressed into a more and more digital world and society, the gold becomes less practical. It's not as pragmatic to use in everyday life. Like, I can't take my bar of gold and go to the coffee shop and buy a cup of coffee. Borrowing against that gold, it's a nightmare. You still got to rely on a third party. There's a lot of middlemen in between, expenses and fees to even do that. So it's so complicated and problematic to rely on gold in these days and times. And back in 2008, when we had the last major financial recession in the US, we were gifted with Bitcoin by Satoshi Nakamoto, whoever he, she, they are, whether it's a government DARPA project, whether it's an alien from outer space, whether it's the Chinese, everyone has their own theory, or
Right.
just some dude on their computer, who knows, which might just be the case. But the Bitcoin itself, and Satoshi wrote about this in the white paper very specifically. Bitcoin as a peer-to-peer cash system was designed to be an alternative to the central banking system, and he highlighted a lot of the problems that money and banking have today that it still had in 2008, 2009, and Bitcoin was a solution for that.
Right.
And in all of Bitcoin's existence since 2008, 2009, we have not seen a recession or a depression or a real financial downturn to test Bitcoin until now.
Right.
And so now we have that revolutionary technology designed and built and conceived specifically to rebut a massive problem that we're all about to face. And now we're going to see for the first time in this moment in history, how does it perform? Is it really that safe haven asset that we will all want it to be? Will it save ordinary people that are stuck in the banking system, that want to opt out, that want to have control, liberties and freedoms over their financial situation and sovereignty over their money and their wealth? That is what makes 2023 so important, which makes 2024 so important, is this whole change, this idea of money. So I've always liked crypto. I've always liked blockchain. And there's a million things you can do in this space. But at this very particular point in time, Bitcoin is the most fascinating to watch.
Yeah, absolutely. And I think that to kind of bring the conversation back to the question, I think we've also got to analyze inflationary
Mm-hmm.
effect going on. I mean, there's $31.5 trillion in debt that's acknowledged. And I've been tracking that for about a little over half a decade. And I think when I started looking at it, it was 22 trillion. So it is absolutely hockey stick parabolic, going straight up. And that is hammering the purchasing power of our dollar that we earn. And you
Mm-hmm.
have to be in places where you're in tax advantage systems, where your money is safe and it's compounding and growing, and that you can access it and get multiple touches on it in another investment like Bitcoin or like real estate. That's the only way that you're going to keep up with the catastrophic inflationary effect that's going on, and so it's the Keynesian versus Austrian economic theories at odds with one another. One is that you can print your way into financial prosperity. And the other is the antithetical opposite of that. And we're seeing the effects of just printing money and spending to be able to achieve prosperity. It doesn't work.
Mm-hmm.
You have to have value attached to your fiat currency. And one of the biggest mistakes in our country, I believe, is when we took our fiat dollar off the metals. When Nixon took the U.S. dollar off the gold standard, because from that point on, I mean, we're talking pennies in value compared to what it was.
Mm-hmm.
Whereas over time, an ounce of gold will buy X, and still an ounce of gold will still buy the same relative value. I mean, if an ounce of gold was $200 at a certain point and it bought a very fine, custom tailored man's suit, that's what an ounce of gold will purchase now. It's $2,000 for a finely, customized man suit, but it's an ounce of gold, still buys the same thing. Whereas the dollar is in a tailspin, man, that's going to crash and burn, and we have to be prepared for that.
Absolutely. I think there's a date on the dollar. It's just that date keeps getting pushed back, unfortunately. It's going to fall apart at some point. So it's good to diversify and start figuring out, what to do with your money. We've gone from 5 trillion in debt to 22 trillion in debt in 15 years.
Yeah, it's 31.5 right now.
31. Okay.
As we speak. Of
course.
Yeah. And there's if you want to Google, there's something called U.S. debt calculator, and you can Google that, and it gives you a real time, second by second snapshot of what the national debt is, and then it breaks down households and breaks down all sorts of other statistics on this webpage. It's fascinating, and it's good for folks to understand that, because the thing is ticking so fast that literally it's just like money's just burning. It's just the debt is just absolutely increasing at insane ratios.
It's difficult for ordinary people. They're kind of like frogs in boiling water, and it's just being turned up the heat very slowly over time. There's something I like to call the cereal box theory. There's probably another word for it, but 20 years ago, $20 would get you a full grocery cart of food and milk and butter and cereal and soda and whatever you want. $20 at the store, and you can barely get some grapes and some bread.
Right.
But that's how they hide the inflation. It's you don't really notice it, but if you wonder why your chip bag is always half full, or why they give you less sodas in a pack of soda, or whatever you consume, and it goes down every few years, it's because they're adjusting for the price of inflation, so they don't have to raise the prices on those goods. And so it's like frogs in boiling water. A lot of normal people, average good people, don't really get to see it. They don't experience it. And then when we have events like this, they try to suppress it, raise federal funds rates, try to print more money, raise debt ceiling, all kinds of different alternatives. But what I'm leading to is a question of how can an ordinary person, maybe start to learn some of these things and educate themselves to better understand, what's happening and how to prepare. Obviously, listening to you, watching this podcast is a really good start. But what are some other methods, maybe some ways that you learned or that you would recommend people checking out to learn?
Sure. Well, my learning process was long and arduous, and I've tried to condense that down for the people that this resonates with. And so my partner and I, we wrote a book, and we offer that book to folks free, and we like to call it a red pill book. And the title is What the Banks Don't Want You to Know. And therein, we lay out some real red pill issues, some of which we've discussed and some of which we haven't. And some of the folks, they're like, yeah, I know this, and it helps substantiate their research. And some are like, it's a brand new world to them. They have trouble understanding, that the Dodd-Frank Act means that the bank can bail in. But this book, we give to folks for free on our website. It's an offer for a free ebook. And if your audience comes in, I want them to make sure as they put their email in that they say they came with Brandon and BlockHash, And that way, we'll know what their interests are, and they can say, hey, I'm specifically interested in this or something, if there's something that we've talked about. And we've got a number of podcasts that we've produced that are all available there as well, that folks, once they get a hold of this, they begin to binge on the topics. But we've tried to really condense it down, Brandon, and make it a real simple path to follow so that they don't get bogged down and overwhelmed. The first place that they start is with the book, the free ebook, What the Banks Don't Want You to Know. And then if that's resonating with them, listen to a few podcasts that we've produced. And if they're totally resonating with what's going on, they can schedule an exploratory call with our team and dig into how it would actually apply to them. So if you've got the small, guy just out of college with the $10,000, and we lay out the plan of how it would work for him. And if you've got a multi-millionaire that is looking for asset protection and financial privacy, we lay it out for them. It's called an 8-year roadmap that we actually apply the system to them. And this is all at no cost to them. It's really to let them take it on a test drive and see actually how it will work year after year for them, how it changes their financial position, and how it can benefit them. So that's kind of our process that we've developed for folks to help them, dig into it without having major brain damage.
Gotcha. Yeah. Well, for everyone in the audience listening and watching, we'll put some links in the description for the episode so you can easily find that stuff for the book, and anywhere, Seth, you want to direct them, just shoot over some of that stuff and we'll put some links together.
Awesome. That sounds great. Yeah. I mean, our website is privatebankingstrategies.com, but we can put the book available right there for you if you want, and they can go straight to that link and make it as simple as possible for them. Be glad to do that.
Perfect. All right. So I think we've gone for almost an hour. Anything you want to wrap up on for this, what'll probably be a 2-part episode series?
Yeah, absolutely. I mean, I think we've got so much to discuss, Brandon.
Oh, yeah.
We've barely scratched the surface. There's so much more, I think, to add for the specific cryptocurrency investor and things that we can dovetail into that. I'd like to come back with you and kind of drill down there some more. But yeah, I'm just really grateful that you had me on and looking forward to some future discussions with you.
Absolutely. And thank you for taking the time too. You're the one providing most of the content here on the episode, on the podcast. I think people are really going to find this not just enjoyable, but also very insightful, because it's not something I think most people hear every single day. Like, there's a lot of personal education, financial education out there, but this is much more specific, prioritizing, preserving your wealth, building your wealth, saving that wealth, investing that wealth, and including crypto too, which I don't think gets interjected as often as it should be nowadays, now that it's so popular and most people in America actually have it. So yeah, thank you for sharing all this knowledge and wisdom. You've been doing this for a long time, and there's no better person to talk to.
Yeah, thank you so much, Brandon. Appreciate it.
Did that story feel like it was about you? Do you feel like you are generating a lot of revenue but are not moving forward as fast as you would like? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please call Private Banking Strategies at 817-200-4777 or visit us at www.privatebankingstrategies.com.